Awesome. And looks like we are live on social media now. So thank you everyone for taking time out of your busy day to join us for today's session on source deductions. Um, if you are joining us live here in Zoom, you can post your questions under the Q&A. If you are joining us on one of the social media channels, then you can post your questions in the comments, and we do have some team members who are going to relay those questions over to us uh, here in Zoom. And of course, if you are joining us on social media, I will let you know that we host webinars twice a month. Same bat time, same bat channel. And you can register for upcoming webinars on our website, cpa4it.ca, under the events section. So without further ado, today's topic is going to be source deductions. If you're not familiar with ourselves, my name is Andrew Wall. I'm the managing partner here at CPA4IT. And our mission is to help entrepreneurs organize their finances, create wealth, and transform wealth into a legacy. And our niche market is service-based professionals, and the majority of which are in the IT profession, or IT field. As I said, we're here to talk to you a little bit about source deductions and payroll remittances. We're going to talk to you a little bit about how to calculate your remittance, the remittance types and due dates associated with them, the remittance methods, how to correct any errors that you might have with maybe an over remittance or an under remittance, and again, how we can help in this process to enable you to organize your finances, create wealth, and transform wealth into a legacy. So without further ado, maybe we should explain what uh, eh, payroll or source deduction remittances are and why they are important. So if you are new to being an independent contractor or having a corporation for the very first time, payroll source deductions are probably new to you. Um, well, new to you making a remittance, but not new to you in that even as an employee, you were dealing with payroll remittances and source deductions, just only from the employee standpoint, where the employer was taking money off your paycheck and giving it to the government on your behalf. Because as an employer, you do have an obligation to remit CPP, EI, and income tax deductions that you have withheld from your employees and remit those to the government on a regular basis. We'll talk a little bit more about what regular basis means because it gets quite complicated when we talk about remitter types and remitter thresholds. And then you tack on the fact that our client base is a little bit unique in that you're typically owner managers, which means instead of doing payroll every 2 weeks or every month that you might have had traditionally as an employee elsewhere, you are likely doing your payroll on an annual basis through the use of a strategy called director's fees or annual bonuses. Now, the CPP, EI, and source deduction and employee tax is very important that you remit it. There's some pretty significant penalties if you do not remit it, and we'll talk more about those as well. Um, but the critical thing here is that with payroll remittances, there is a lot of variability both in what the deadlines are as well as how much you are remitting. One overarching principle when it comes to payroll remittances that is important for owner managers to understand is that an employee can say to their employer, do not withhold income taxes from my payroll because I've already got deductions or made payments or installments. There can be a million and one reasons why you don't want the employer to withhold um, employees' income tax. However, the employer must withhold and remit CPP. Even if you have another full-time job that has maxed out the CPP contribution, you must still, as the employer, withhold and remit CPP based on the salaries that you are paying to your employees. So this is quite critical. And like I said, there are some significant penalties if you are late. Another thing, we'll talk a little bit more about the remittance deadlines and stuff like that. But when it comes to remittances, remittances are deemed to have been made on the day in which they are received by CRA, or sorry, the receiver general. So it's important to know and understand what the deadlines are, but also to know and understand the different payment methods and how they will reflect as far as deemed to have been made on the day in which it is received by the receiver general. For example, if you're going to the post office and having it stamped, it's considered received the day it's stamped. If you're going to the bank and making a payment at the bank, it's considered to be made at the bank. If you are doing it online, however, through your bank, typically that doesn't clear for at least one more business day. So that is a really important thing to understand about how you are making your source deduction remittances and what those deadlines mean. Um, and now I want to talk to you about whether source deduction planning is actually applicable to you. And I'm going to share my screen here for a second because I want to share with you an email that went out to most of you. If you're a client of ours, you received this email. And it's talking about the source deduction deadline. We've got 2 emails by today that have gone out with reminders about source deduction planning. And you'll see on this email, we have 3 boxes that you can click, 3 buttons that you can click. One is I'm doing my personal tax planning on my own and don't need any further assistance. The second is I have already done my tax planning during my annual review with CPA 4IT, and I don't need any top ups or adjustments. We'll explain what a top up and an adjustment is in a minute. And I have sent my tax planning to CPA 4IT, not using the web form linked below. And again, we'll talk about that web form in a minute or two. But you'll see something different in the second email than the first, which is this text here that says, please only click one of the 3 options below. Clicking any of the options will stop future reminders. We put that in because what we were finding is that many of our customers were actually clicking on all 3 of these buttons to try and figure out what they do. And they don't do anything other than to take you to a thank you page from your perspective. However, from our perspective, they are updating our CRM system to notify us, hey, if you clicked, I'm doing my personal tax planning on my own, it's saying, okay, take this person out of our queue. We don't need to deal with them anymore. If you say, I have already done my tax planning during my annual review, it's going to go to make sure that we already have the tax planning, or a task is going to go to a team member to make sure we already have that tax planning. It's been done. And then if I've sent my tax planning to CPA 4IT, not using the form below, i.e. through Lisio or, God forbid, email, we're going to go and send a task to your team as well. So those 2 items are going to trigger work done by your accounting team, which is billable work. So please, please, please don't just randomly click on these buttons to see what they do. Make sure you're clicking on the button that is truly applicable to what it is that you are actually doing. Now I'm going to stop share again for a second so you can see my beautiful face and tell you a little bit more about whether you actually need to complete this form and what we gather on this form to figure out what tax planning we should do for you. So first and foremost, the thing you want to look at is this my very first year in operations? Because if it's your very first year, it's probably going to be important for you to book a meeting with your account manager to just understand this, because it can be quite complicated when we talk about source deductions. You're going to see that there's many different deadlines that can vary. This whole strategy of annual versus monthly is a little bit complicated, and also understanding, tax planning, how that actually works in your company and how to do it effectively can be overwhelming in your first year. But I'm going to give you a couple of shortcuts that are going to make understanding that a little bit easier. So if it's in your very first year of operations and you left full-time work, or you had T4 salary from other sources throughout the 2025 calendar year, then odds are we're not going to do any tax planning for you in 2025. Now, I say odds are because we might, depending upon what your income level is. If you've only got, $10,000 in income from other sources, you haven't even used up the lowest tax bracket. So odds are we're going to do what we call a top up, which is give you some more money in the form of a salary. Um, Now, if your income is already above the lowest tax bracket, odds are we're going to take any money that you have physically withdrawn from your corporation because you might have taken money out of your corporation. But what we'll do is we'll declare that as income in 2026, where you don't have this other source of income. And again, this can get quite complicated, which is why I say if it's your first year, probably the best shortcut I can give you is book 10 to 15 minutes with your account manager, and they'll walk through your individual situation to do a little bit more planning with you. Now, if this is not your very first year of operations, then you are probably going to want to look a little bit closer at your individual situation to figure out if you have to do any tax planning. So again, first is, have you done tax planning for the 2025 calendar year already as part of your normal accounting process? And with a corporation, you have the unique benefit of declaring salary anytime during the corporation's year and also declaring bonuses to directors up to 6 months from the year end deadline. So if you have a July 31st, 2024 fiscal year end, you have the ability to bonus some of the money you've taken out as salary into 2025. And if you are already, at a top tax bracket, um, or, where you want to be, then odds are you're not going to want to do any additional tax planning, which means any money that you take out, during the 2025 fiscal year will probably go into 26, right? Now, conversely, if you had, say, July 31st, 2024 year end, and you had taken the majority of income into 2024 and bonused forward only a small amount, which there are many reasons we could do that and why we might do that. But let's say that you'd bonused forward only 10,000 to use up the basic exemption, 10 or $11,000 to use up the basic exemption. Odds are you're not going to want your salary for 2025 to be only 10 or 15,000 because it hasn't used up the total of the lowest tax bracket. In that case, we'll again do what we call a top up, which is where we'll start to look at other factors as far as how much money have you taken out of your corporation since your last year end? How much of that money did you use for director or deductible business expenses that we'll be able to claim as expenses paid for by those directors' advances? And based on that, we'll look at how much we'll choose to declare for you in 2025. We'll also look at a few other factors, including whether you have family members that we could do any income splitting with, how much you've contributed to RRSPs because RRSPs lower your taxable income. Do you have a target net income because maybe you're looking to buy a house, and even though we've got the ability to give you a lower income, maybe we want to give you a higher income so that you can qualify for traditional mortgages. And again, do you have any family members that we might doing any income splitting with, whether that's children or parents or spouses? And then again, are you looking at taking any of this in the form of a dividend? So we've done some past sessions on the difference between a dividend and salary, but I will reiterate here that a dividend comes out of retained earnings and goes to shareholders. A salary comes out of the net income is an expense that reduces the net income of the corporation, which means because no taxes have been paid on that, you need to pay payroll source deduction remittances on that. So dividend, you're not going to have any payroll remittances. The deadlines that we're going to talk about shortly are completely not applicable to you if you're doing dividends. And they only apply if you're taking salary. So we'll look at that as well. Now, again, I'm going to share my screen here for a second. And it looks like we've got some questions, actually. Which button do I click if I'm going to fill out the tax planning form? I love that question because it perfectly aligns where I'm going right now. So let me share my screen here, and that is perfect timing. So we'll share a screen. Okay. So the bottom of that email that we read before, you can see that's the bottom of that longer button that we saw on the earlier screen. You'll see the ability to register for our live webinar, today's session. We are only doing one this year. There will be a recording. In past years, we've done 2 or 3. We sort of said, hey, we're just going to reuse the videos that we record here, so they'll be available. You can view our recorded session from last year, which will be basically very, very similar with a few slight differences because every session I do is different. And then you will have a button down here, sorry, to go to the tax planning calculation worksheet. When you click on that, you will be taken to this web form. So clicking on that button in itself will not stop the emails from coming. However, completing this form will stop the email. So you have the option of choosing one of the 3 buttons above or completing the form down below. Any of those 4 actions will stop you from receiving future emails so you're not hounded. Now, we do a lot of hounding here and reminders because clients do tell us they want to be hounded and reminded. If you don't want to be, you can stop it by either clicking on one of those 4 options or by reaching out to our team and we'll effectively click one of those buttons for you. But when you go to this form, there's going to be a number of questions here, including, do you want us to actually prepare the T4s for you? Because you might want us to do the tax planning, but not actually prepare the T4s or T5s. And then we're going to ask you some questions that we need related to the tax planning. Things like, how much money did you take out of your corporation? What was the net income of the corporation? We are going to use all of that to put together a tax plan for you. And then we will send you a draft email with the amount of source deductions that you need to pay, and along with what the tax planning is, whether like how much money we're actually taking and how that's split across the multiple employees that we might choose. Now, what I should share with people is the template that we use. It's just a simple Excel template. Well, it's not that simple because it's quite a complicated template, but it's an Excel template. And unfortunately, it is limited to only 4 employees. Again, the nature of our business, we are dealing with small owner-managed businesses. So most of the people we know, that solves their need. If you are trying to do planning for more than 4 or 5 people, it is probably worthwhile, and again, having a conversation with your account manager because they're going to have to do a custom worksheet for you on that, which we absolutely are more than capable of doing. It just takes a little bit more work on their end. So I just wanted to share with you that. Now I'm going to kill my screen again so you can see that beautiful mug and talk to you a little bit about the different remitter types and due dates, because this is where things get a little bit complicated. You're probably wondering, hey, why are you doing all this planning around November, December? CRA tells me I got to make payroll remittances, quarterly or monthly or some other time frame. And I'm going to do my best to explain why we focus around the November, December timeline, and why we will always tell you that your deadline is either the 3rd day of the 7th month of after your fiscal year end, or January 3rd. Those are the deadlines that we're probably all going to tell you, even though I'm about to give you a whole bunch of different deadlines. And that's because that's the earliest it could be. And we always err on the side of being conservative. We'd rather tell you to pay early and then you have a few extra days rather than, tell you the date we think it is and then your threshold has changed and now you're late. We have unfortunately dealt with that in the past. So first of all, what are the due dates and what are they based on? So they're based on when an employee is paid for her services, their sort of payday, so to speak, rather than the pay period for which the services are rendered. This gets a little bit complicated when you're an owner manager and you're taking money out of your corporation throughout the year, and then we're declaring a payday using minutes in your corporation and a director's bonus, which is commonly what we're doing for most of our people. So that is typically going to be declared to have been paid on either December 31st, which is the last day of the calendar year, or 6 months, or actually technically 181 days from your fiscal year end if we're doing that bonus out. Now, if the due date that is associated with your payday or pay period falls on a Saturday, Sunday, or public holiday, you do have until the next business day for the payment to clear. So that is nice. However, if your business goes bankrupt or stops operating, i.e., think dissolution, you do need to remit your source deductions to the tax center within 7 days following the closure or bankruptcy of your business. And this is where things can get a little bit complicated because oftentimes the date of dissolution is going to be well before we actually file and have the information ready. We usually have plans around that. So if you are dissolving, just make sure that that is something you're discussing with your account manager. So now we need to determine what type of remitter you are. So we know the payday, but we need to know what type of remitter are you. Are you a regular remitter or a new remitter? Are you a threshold 1? Are you a threshold 2? What are these thresholds? What the heck do they mean? And what are they based off of? So they are based off of something, another fun 4-letter acronym, AMWA, which is average monthly withholding amount. So this is the average of the amount of money you are withholding and then remitting to the CRA. So it's the average monthly amount you are giving to CRA. If, like most of our clients, you are paying only annually, then that's basically just the annual remittance that you are making. Now, to make things even more complicated, it's not the average monthly withholding amount for the current period. It's actually from 2 calendar years ago. So you have to understand what your remitter type is. You're trying to figure out what was my income from previous 2 years, or you're going to the CRA website to look at what threshold they have you listed on their website. There's another way to check easily. But again, it can be quite complicated understanding what type of remitter you are and then what the deadlines are. Now, because the remitter type is based off of the average monthly withholding amount from 2 years ago, that means for your first 2 years of operation, you will be a regular or new remitter. And this means that you have the furthest deadline, so you have the most amount of time to make your remittance. So a regular remitter, so anyone who is in their first 2 years, or anyone with an average monthly withholding amount of less than $25,000, will have their source deduction due on the 15th day of the month following their payday. And it can get even more complicated than that, because if you paid in the first 15th month, it could actually be the 24th of the current month. But again, speaking to our client base, that is typically always going to be the 15th of January or the 15th of the 7th month following your fiscal year end. Now, a threshold 1, which is where the majority of our clients fall into place, is an average monthly withholding amount of 25,000 of more than 25,000 and less than $100,000. Now, the deadline for a threshold 1 is going to be due on the 10th day of either, again, that 7th month or of January. And again, so what we're focusing on right now is because the last day you can declare salary in the year is December 31st. We're focusing on that January either 15th or 10th, or now with a threshold 2, where an average monthly withholding amount of over $100,000, you would be due on the 3rd. And again, that's why you're going to see all of our correspondents telling everyone, hey, the deadline is January 3rd, the deadline is January 3rd, the deadline is January 3rd. It may not actually be. And in fact, sometimes when you go to your CRA portal, it's going to try and schedule it for the 15th or the 10th, depending upon what type of remittance type you have chosen from the your online payment option. But even if your bank tells you it's the 15th, but you're due by the 3rd, if you pay by the 15th and you were due by the 3rd, the CRA is going to hit you with a late penalty. And those late penalties, as I said, are very significant. Now, if you were attempting to make a payment for your source deduction, there are a number of ways that you can pay your source deductions. So you can pay online through either CRA's portal, which is limited. It's effectively Interac, so it is limited to your Interac payment thresholds, which is typically $3,000 a day. So if you're going through CRA site, it typically will take multiple scheduled payments in order to pay your source deduction because your payroll remittance is usually one of your largest taxes. Um, with that, with the CRA portal, you can pay by Visa, debit, MasterCard, or Interac. Again, I am assuming most of you are doing Interac because anyone who is thinking of using the plastic or the paying with credit card, which is an option now, to get credit card points, and I'm all about points. Anyone who knows me, like get an Amex credit card. I think they're amazing. Um, you will never get more in points than what it costs you in interest to do that. So it's usually not the greatest way to do it. But you can make a payment through the CRA's portal. What I do recommend, though, is to use your bank's payment gateway. And usually it's under Pay My Bills. It is different with each bank, and there's usually a tax remittance or tax center area of your thing, and you'll have to go in, set that up, put in your business number, and select the appropriate account that you're choosing to pay. And this is where it can get a little bit complicated because there's payments due, and there are pay returns. Choosing the right one can be complicated. Effectively, there's usually an option that says PD7A. That is the option you want to use if you are paying online through your bank. You can pay by check by going to the post office. You can also pay in person at your financial institution. If you are paying by check or you are paying at your financial institution, you need a remittance form. That remittance form is not something that we can provide to you. It is mailed to you from CRA. It is often available in your CRA portal under the mail sections, but it is not something that we can print for you unless we can find it in your mail settings. And what I can tell you is the online mail portal for CRA is, let's just call it an opportunity for improvement. It's got lots of opportunities for improvement. So sometimes it can be difficult to locate those forms. So if you are planning to pay on the day of the deadline and you want to go to your bank or to CRA, you are going to need that form. So you need to make sure that you have it in hand. In addition, if you are a new client, you may not even have a payroll account yet. Now, if you're paying through your bank and you put in your business number followed by RP001, even if you don't have a payroll account, it will actually create a payroll account number for you. But if you want to go in person or send it by mail, you will need to create your payroll account probably 4 to 6 weeks before the deadline so that you can get that remittance form in time. So just a heads up. We do have some questions coming through. I'd love to see questions. Please share those as you got them. For the planning details questions, since it is only November now, how do I answer questions such as how much money did your business earn if I don't know what's going to happen in December? So, we're just looking for your best guess based on where it is at now. So again, if your year end is after December, you're going to have the ability to declare some of this into next year. We're just trying to get our best understanding of where the corporation is at now. The reason, because to be honest, the corporate income isn't as critical as how much money you have actually withdrawn, but it does help us because if you've let's say that you've got another source of you got a money tree in the backyard and you're not actually pulling money out of your corporation, but your corporation has earned, a net income of $560,000. Well, we might want to give you salary even though we're not obligated to, because you're over the small business deduction threshold. And, oftentimes in that situation, most people will bonus up because, the tax rate over the small business threshold is going to be similar to what the personal rates are. So we might as well get the money out at the same tax rate as leaving it in the corporation. So, just do your best guess, even if it's just up to where you are now. If you bill roughly, 12,000 every month, you can, guesstimate for December. It's best to guesstimate if you can. If you can't, just do it up to the current date. So hopefully that answers your question. And I got to figure out where I was. So I was talking about different payment methods. So we've covered. Now I do want to cover penalties. So let's say that you miss the penalty or miss the deadline for whatever reason. Um, the money that you are remitting to CRA is often referred to as money held in trust. And that's because this money that you were supposed to remit to CRA has been withheld from your employee's paycheck. And you are holding it in trust and remitting it to the government based on your tax deadline. And so effectively, the government sees that not as your money, but as your employee's money. And even though you are probably both the employer and the employee, the CRA isn't looking at it that way. And they are definitely worried about people who are, taking money from their employees, holding it, and not giving it to them on the employee's behalf. And so the penalties for payroll remittances are 10% if you are a minute late. And in addition, I've not seen a case where those penalties have been waived. I'm not saying it's not possible, but I have not seen that. So there's 10% late penalty if you are a minute late. In addition, if you fail to deduct the required amount of income tax more than once in a calendar year, CRA can apply a 20% penalty to the second or later failures. So the penalty can be as high as 20%, not to mention interest that would be tacked onto this as well. So not making these payroll remittances is quite punitive. Now, what happens if you haven't made enough of a payment to cover all of your employees' taxes, or you have paid too much? Typically, how we adjust that is through the T4. So you have a source deduction remittance and you have a T4. The T4 and the source deduction remittance do need to line up, or you are going to get a letter from CRA with a peer review and effectively a payroll audit. If they do match, generally speaking, you're okay, even if you have under remitted. And I say, generally speaking, you're okay because if you have under remitted, but you have still remitted enough to cover the CPP, you're going to be okay. Because what we'll simply do is just report on the T4 the exact amount that you did remit, the total salary that we are declaring for you. And when you file your personal tax return, CRA is going to look at the T4 and see, oh, okay, your employer has withheld and remitted, X. You have a salary of Y. The tax on the salary of Y is not X, it is Z. So the delta between X and Z is what you owe on your personal tax returns. Now, conversely, if you have overpaid, the difference between X and Z is an overpayment, and you will get a refund when you file your tax return. Now, there are other ways to get overpayments back. And also there are ways to make additional payments if you have under remitted. But if you have under remitted and you make an additional payment, that additional payment, if it's late, will be subject to late penalties. So it's better to adjust the T4. Also, if you have under remitted, if you have over remitted and you've made plenty of payments, if we don't adjust it on the T4, getting that money refunded from CRA can be very, very difficult. It will happen, but it often takes a lot more time than you were expecting and is just not a fun process to go through. So typically we recommend adjusting the T4 to solve for both under and over remittances. Now, the other thing that might come up is a misapplied payment. So let's say that you made the payment on time, and it was applied to either the wrong year or went to corporate tax or GST instead of payroll. Those are actually very easily fixed. We can now do a lot of those transfers online, or it can be done over the phone. I think technically they're telling people that they don't do it over the phone anymore, but we have found that they will. but it can also be done online. So what we say is either go to your online portal and make the and transfer the payment there, or call CRA, or if if it's complicated for you and it's difficult, we're more than happy to take that on for you and get that process because we've done it about a gazillion times. So now we've covered deadlines, covered penalties, we've covered whether you need to do any of this planning. Now we just want to cover next steps. But before we do that, I do have another question that's come up. Sorry, I might have missed this if you've already explained it. After filling out the tax planning worksheet, is there anything that needs to be submitted? Just the payment. So once you've completed the form, and there's like a handful of people that have maybe received their tax planning worksheet from our team. But we are still working through those right now. But what will happen is you will get a message in Lisio from us with a attached tax plan that will say, who salaries are going to, whether it's just yourself or we have other people that we're income splitting with, what their gross payroll amount is, what the total remittance due is, and that information is necessary for you to be able to go online and make your payroll remittance. Because when you pay your payroll tax, they are going to ask you for a couple of pieces of information. They're going to ask you for the number of employees, which hopefully is pretty clear cut. It's, the number of people that we're doing a T4 for. They're going to ask you for the gross payroll. So this is the total payroll before source deduction withholdings for all of the employees. And they're going to ask you for the pay period. So this is the biggest area most people tend to make mistakes. They might put in their fiscal year end or something like that. If you're making a payment on January 30th, that period is going to be December. They don't even ask you for a day. They just ask you for a month. So that is going to be December. And so that payment is the only thing you need to do after this form. You will receive back a message from us with a amount to pay. And that payment is the only thing that you need to do after this. So the next steps are complete that personal tax planning form and or book a call with your account manager to go over the tax planning. Then based off of the tax plan we send over to you, you're going to make your remittance according to that tax plan through my recommendation through CRA or through your bank's online portal. So hopefully that answers your question. And I'm, for the most part, wrapped up here. So I'm going to give everyone a few more minutes in case you've got some additional questions. I know that I'm throwing a lot at people who are approaching this for the very first time. And I know based on the attendees, I'm going to take a look at this and please don't mind me recording. We got about 20 people online right now. Some of these names I recognize as existing clients who've been with us a couple of years. And what I can tell you is if you find this overwhelming, you're not alone. That's why you're seeing people who have actually come to this webinar multiple times, even though we deliver the very similar webinars every year, is because source deductions are arguably the most complicated tax that you are going to pay as a business owner. So GST, the simplest and most clean cut, one deadline. Corporate tax gets a little bit more complicated because you got now 2 deadlines with, either 3 months after your fiscal year end or 6 months. And that's only for small business owners. If you were over the small business threshold, it's more complicated than that. And again, with GST, actually, it can be a little bit more complicated because you might be monthly or quarterly based on your income threshold. But source deduction, it could be any of the 12 months, and it could be the 3rd, the 10th, the 15th, the 24th. And that combined with the average monthly withholding amount being based off of information from 2 years ago makes this difficult for even the most seasoned professionals to comprehend. So if you're struggling with it, totally understandable. Book some time with your accounting team and we'll be more than happy to walk you through the process because we've been doing this since 1984. And we're very comfortable with the process. And we do recognize, though, that it can be difficult in that first year of operation. So again, thank you everyone for taking time out of your day to join us on this session. And if you do have any other questions, feel free to post them in. I'll give them another minute or so. And I'm going to assume, Iman, nothing's flowed through from social media because I'm not getting any questions on social media. Oh, here we go. We got a question. I missed the seminar, which we had on October 21st about don't let CRA double your taxes. Can you please share the video link? I would like to watch it. Absolutely. Maybe Iman, I don't know if we can put that in the chat. If you can drop that in the chat, that would be great. What I can tell you is it's on YouTube, it's on Facebook, and it's on LinkedIn. So if you go to like our posts and go to that October 21st date on any one of those social media channels, you will be able to find the video. And Iman, one of my team members, will hopefully drop that in the chat as well, if you're still here before we wrap. Awesome. So again, thank you everyone for joining us for today's session. And we'll see you back in a few weeks with our next session. I think our next one is on the benefits of a holding company, which is, again, usually a well-received webinar. So thank you again for joining us. And again, one last thing, call to action. We are putting together our 2026 events calendar. If you can, here's the link. Let me copy this. I got it in the Q&A. Can I post this in the chat? Chat. I want that to get everyone. Boom. Okay. Link dropped. So again, as I was saying, we are putting together our 2026 calendar of events. I would really love to hear from you personally what you would like to see in the webinars that we're hosting. Because our mission is to help our clients organize their finances, create wealth, and transform wealth into a legacy. And we believe we do that through education. And I'd love to know what you guys would like us to, put together as far as education for the 2026 year. And if we don't hear from you, you're going to get more of the similar content we've done over the last few years. And I'm sure you want fresh stuff. So please do share with us what you'd like to see. And with that, I will let you get back to your days. And again, thank you very much for taking time out of your day to join us.